at the Vancouver Natural Resource Symposium, sitting down with Rob Cameron, CEO of Commander Resources. Rob, thanks for joining me. How are you?
Oh, pretty good, thank you.
So we just started a pretty good discussion on the prospect generator model. I want to continue it for the benefit of the people watching. But Commander is a Canadian prospect generator. You said you had a single property in Mexico, but it's Canadian. The question I asked you that got it started was, I've been speaking with a fair number of prospect generators, and it seems to me that the model is still evolving, or that people are tinkering with it to get the right mix. What are your thoughts on that?
Well, that's true. I mean, fundamentally the model is very disciplined, and you do your early stage exploration and you identify a portfolio of properties and you bring them up to the drill stage is kind of the cutoff line, and then you look for partners to move you forward. In a difficult market, there's fewer partners, so you're sometimes tempted to maybe take that project you've generated and maybe go one more step and maybe convince yourself it's worth drilling. In some cases that's a valid argument, but it's sort of this departing from the true prospect generator story, in the sense that you're taking on a little more risk. The whole idea of a prospect generator is you manage your exploration risk where the odds are extremely high by bringing in partners and using essentially partner-funded programs to explore your properties on your behalf. You take a little bit of dilution in your property, but not dilution in your capital structure. So it's disciplined, but there's always pressures saying, well, maybe this one's just so good you need to drill it yourself. But geology is an inexact science. They may look good, but do you really want to risk shareholder dollars on a drill or kill project program?
Right.
It's a dilemma. Everyone struggles with that because we all, as geologists, fall in love with our properties, and we want to test them.
That could, right. So, and I think that's where it lies, right? I think there's more of the people who are fans of drilling and hitting it big than there are people who want to remain disciplined and manage the risk.
Yes,
and
there's room for both investors in this business. Right? So our partners have investors that like to see that take the chance and drill it and have the big rewards. But of course, the odds are stacked against you. So but the rewards are there. So that's the balancing act. And there's a more disciplined approach, like a prospect generator, that manages that risk reward. So you could mitigate your risk by using other people's money and having multiple projects concurrently funded by others. You're less dilutionary because you're not spending your treasury as fast, and it's just a different approach. And you're still exposed to high ends of risk because even though you take less interest in the property, you have a royalty, you got share exposure. There's other ways to expose your shareholders to that discovery when it comes along.
But relatively, though, you say it's largely reduced, though, doing it this way. I mean, you never get rid of the risk completely.
No, it's managing your risk. We're all geologists, so we manage geological risk. We know the odds of discovery are high, balanced by great rewards. So, we could sort of plan that risk and have a little bit of exposure to multiple projects, as opposed to putting all our eggs in one basket with a drill or kill program on what you think is a great target, which it could be a great target, but the odds are stacked against you.
And if you look at the sort of the relative capital requirements of running this business model versus if you do go the route of we're going to drill it, I mean, that's, what is that, order of magnitude of capital like this? That's
the initial drill test can be equivalent to maybe what you do as a regular prospect generator, but it escalates from there. And what you've actually done is destroyed value because you spent some money drilling and testing a project. If it didn't work out, that project is now dead and worthless too. So it's kind of it's a trade-off. It's really difficult.
Okay. So tell me about some of the projects you have going on.
Well, Commander's been around for a long time. We were formed in 1989, so it's got a long history. So the current iteration, when I joined the company, was from about 3 years ago, where we started to really focus on the prospect generator business. So we have 9 projects available for option, but we have 2 active joint ventures. So the first active joint venture is with a company called Fjordland, who is being funded by HPX, Robert Friedland's private exploration company, and that's on a nickel project in Labrador. We call it the South Voisey's Bay project, which, as we all know, is where Robert Friedland made his real big win there back in the day. So that's an active project with them. And then we just announced this week a new joint venture with Freeport-McMoran on one of our copper projects in BC, and we're just getting underway. The crews just hit the project yesterday on the ground, and they're funding an exploration program on a really grassroots porphyry copper target in British Columbia. So 2 active joint ventures. Prospect generators are measured on how many active joint ventures you have. So we got 2 in the bag. We have 9 other projects that we're actually seeking partners on, and I'm fairly optimistic that we'll be able to get 1 or 2 of those partnered out this year as well.
Okay.
And they're spread across Canada.
And so beyond those partnerships, is there anything else we should be looking for from Commander in the next, say, couple quarters?
We're working up our other projects. One we just announced the results this morning is from a project we have in Ontario. Surprisingly, it's a project the company's owned since 1989. It sort of just lived in a bunch of banker boxes in a warehouse all this time. So we've recently dug through that old data. We compiled it. We identified a compelling target. It's a VMS target in Western Ontario. And we flew the first modern airborne geophysics survey this fall, and our crews just came back from a work program on site with a ground follow-up of some of the conductors we identified. The results we released today were high-grade gold and silver numbers, which is great, seeing as the project originated as a zinc project. So it's transforming rapidly into a precious metal component. And if you recall back in the 80s and 70s, no one was assaying for gold. So this is a new aspect to these old projects that I think is transformational. So it's looking really exciting.
All right, very exciting. Rob Cameron, thanks for joining me. Really appreciate it.
Okay, thank you.